All right, so welcome back, everyone. We're going to be discussing PayPal within the community. So this is community discussion. I'll give you guys a quick rundown of what we just discussed and then continue from there. So we're discussing PayPal, as PayPal has actually rallied a little bit off the lows, about 20 plus percent, just over 20%. But as you just saw in the 5-year chart, it's ironically actually also down 21% in the past 5 years. Some of you looking at this saying buying opportunity, others looking at this and saying it's an industry I would never touch. So we brought up an interesting question, and I'll actually share not this screenshot here. We don't need this one. This one here, which is Apple Pay transactions versus PayPal until December 2019. What you see here is it overtook in December of 2019, which again, that's in the past. Where it is now is probably has accelerated. So I will say this: I would not invest based off of anecdotal evidence, but I have used PayPal as many times as I think I have fingers. And the times I've used Apple Pay, well, I can't even count. I was an Apple Pay customer before I was a PayPal customer. In fact, PayPal, I used it almost out of just curiosity, sheer curiosity, because there's not really a need for it in my view. I can do pretty much most of the things I can do with PayPal through Apple Pay, and so I never saw the need. Apple Pay or Apple has also moved a lot in the banking services, as you guys all know, the Apple Savings Account, the Apple Credit Card, which now is also, but the banking solutions have are going to be going through a switch here soon with Goldman Sachs leaving. I believe they have about a year and a half before that change goes into effect, so they're still going to be the provider for now. Now we'll see here. I'm getting information shared to me to share with you guys from the community. At stores and more, Apple Pay is accepted at over 85% of retailers in the US, so you can likely use it wherever and however you want. If you're not sure, just ask. Apple Pay works anywhere that takes contactless payments, from vending machines and grocery stores to taxis and subway stations. I feel like this was a natural business for Apple to get in between, and this is more so a discussion that we've had with other members of the community about the types of businesses you want to get involved with. Something that PayPal is involved with, or the business, let's say, environment, is all about getting the costs as low as possible. So it's a race to the bottom mentality. You have PayPal and pretty much all of big tech getting in to try to take share from PayPal. This is money that they would be leaving on the table, and they feel like they could also capitalize this and make it more convenient for their customers to use similar services. Now, PayPal has been expanding, just repeating information you guys already know, into services like Braintree, which is their white label product. That competes with the likes of Adyen. And Adyen recently, as we discussed here in the community, we had a community member who was very confident. We had several community members who actually were very confident in the thesis behind Adyen. I stated when we were discussing it previously that the main risk with Adyen is waiting and seeing how the Braintree competition really, if it hampers their growth or not. In particular, in North America, while in prior quarters Adyen had reported slowdown in growth in North America, Braintree was seeing strong growth. Now, recently, in the recent quarter for Adyen, all of these fears seemingly have been thrown away. So if I actually pull up Adyen's share price, I'll point out exactly when the change happened, and it was right around here, right when they reported earnings. And you can see the market reacted with up until now, a 71.3% increase in share price. Now, what essentially occurred is the dispelment of the concerns about slowing growth. For now, it seems like Adyen is not being affected as what we might once thought. So my main concern is pretty much gone. And again, the Braintree and Adyen part and also Stripe business is a bit better than the self-checkout, which for now, that's PayPal's bread and butter. That's where all of PayPal's profits are made. And their take rate there is also at its highest. Braintree has a lower take rate, Adyen has a lower take rate, and Stripe has a lower take rate. Stripe focuses more on the SMB market, so I don't really look at Adyen and Stripe as competitors. They focus on completely parts of the market. At one day, they might try to overlap, but there's still so much market share to take in the large enterprise scale businesses and also in the SMB. So for now, they're kind of staying in their own separate ways. Braintree is coming after Adyen's business. And so with the last report from Adyen, we saw that growth reaccelerated. And so again, market rewarded as such. Will it get back to its prior multiples? I don't know. But this isn't really a discussion on Adyen, more so a discussion on PayPal. So someone brought up an interesting point. Does PayPal, are they in the financial position to try to reinvent themselves? And we'll take a look real quick on the cash and cash equivalents. Keep in mind that right now, PayPal is betting big on its business, on its equity, and they are buying back tons of stock. So most of their cash flow that's coming in is going to be used in the coming years, assuming management doesn't change their tune, to buy back stock. While this is a great use of capital, if the shares are undervalued, or let's say if the business doesn't deteriorate, this could also be a poor use of capital if the business is going to start to deteriorate here in the coming years. That has to be seen. So we kind of are in a wait and see moment. I think if you're buying here and you're making that assumption that the checkout, checkout from PayPal kind of remains flat, and then they get some growth from Braintree, I see that as your pathway to success here. I think that if you start to see deterioration in the checkout business, that's where other, let's call it, I'm going to say it nicely, underperformance scenarios might start to be more likely. And I'm saying underperformance to market. Let's not get into the potential for loss of capital or permanent loss of capital. So, but I think if you're still betting on stability in the branded business and growth in the white label business, okay, this seems like it's a really cheap business to get into right now. Now let's take a look at again the debt load. So they have a good amount. Their balance sheet's healthy. There's nothing really to point out and say this is very dangerous, I'd stay away. No, it looks pretty healthy. Do they have enough cash to reinvent themselves? In other words, do they have this massive cash hoard? No, I wouldn't say that either. About 10% of their market cap is cash. If they were to just spend all that cash tomorrow, they're producing sufficient cash flows in the present term to still have a healthy balance sheet. So what I'm getting at there is the leverage isn't very high. But I don't think they have the let's call it the massive firepower that some of their competitors have. So one of their main competitors that's coming in terms of the branded checkout, of course, we have what we think of traditionally as the cell phone companies, Apple Pay, and we could call it the cell phone software. Let's call it. That's, I think, a better way of describing it, because Google is not the entire Android ecosystem. They are the bedrock, the software behind it, but you have Samsung, et cetera. And I think Samsung has their own Samsung Pay. Meta came out with their own Meta Pay. Everyone seems to be encroaching on this. And then Amazon, I think we should also talk about the news here for Amazon, but Amazon ended their relationship with Venmo. So Amazon drops Venmo users, and that goes into effect I believe next year. So I'll use this article. Actually, that article is annoying. We'll just use CNBC because they got the nicer little prompt here. But PayPal shares slide after Amazon drops Venmo as a payment option. So the company announced in October, this was just announced, so just now a couple months ago, it would accept Venmo at checkout. And then literally the next year, the following year in December, we get the announcement that they're going to be dropping. And I think that's effective in January. So lasted, about a year and something. So I believe that this could be because of a variety of reasons. I know, and I've been listening for the life of me, I can't tell you why I listen too much to the management at PayPal, just maybe out of intellectual curiosity. The current CEO has been talking to shareholders via the web conferences that, hey, we need to start evaluating our business lines, focus more so on sustainable growth, profitability, some of the words that he's using. This makes me think that the Venmo checkout was not Amazon didn't see it as being priced correctly. And something that Amazon is they're in the business of scaling. Scale matters. And when you're looking at cost structures, any small incremental decrease in costs is a huge amount of potential increase in income. So you have Amazon with a revenue run rate in the 600 or so billion US dollars. And you have something that could be costing you as much as 250 basis points, 150 basis points, decreasing that to maybe at least 50 basis points down in terms of average cost on a transaction, scaled at the size that they are, that could lead to actually huge nominal savings. And so Amazon, as they continue to try to figure out ways to become more and more and more efficient in this very competitive landscape that is retail, that's something that I wouldn't be surprised if that's the reason why they decided to end their relationship with Venmo. It's just quote unquote marginally more expensive. And like I said earlier in this video, well, what is this industry focused on? It's a race to the bottom. And that's a main concern that a lot of our members have had. But that being said, is this a short candidate? I don't think so. So if you thought this whole video was going to be bearish PayPal, I think that PayPal has the setup for a sentiment shift. But that's more of a speculation more than anything, because on evaluation, on a thesis standpoint, right now the story has to break. The narrative has to break that PayPal is not going to be able to adapt properly to the changing environments, that the likes of these labeled or branded checkouts isn't going to take market share from PayPal. If that doesn't happen and we get some sort of narrative shift there, I think that you could see a strong rally here in PayPal over a short period of time. Is that worth the risk to you for permanent loss of capital or even dead money? I mean, that's really the question here. That you have to come to that determination. Club members, you guys know how I have a small speculation. We've talked about that in the past. I won't get into too much detail about it. But as far as a legitimate investment, I have none in PayPal. There is no exposure to PayPal. Okay. Now, what are some other adjacent businesses that I think are a bit better and more defensible than PayPal? I'm going to state the obvious ones, right? You have actual, not boring, very defensible fintech in Visa and MasterCard, that their moat has yet to be challenged in any meaningful way. You also have the only financial business that I sort of say is the business that I could comfortably feel like owning forever, and that's American Express, a business that controls their own network of payments, a business that controls the branding and relationship with the customers. They control the full relationship and transaction experience. That's American Express. But very different business, similar but very different at the same time from a Visa and a MasterCard, who take no credit risk whatsoever. So they are objectively a better business. I can just say that if the methodology for how payments are done in the future changes, that does bring into question Visa and MasterCard's current moat or current status. But those two businesses currently are a much higher quality business. But coming back to the likes of PayPal, well, PayPal operates on the rails of Visa and MasterCard. They're not the same business. I remember people would compare PayPal and PayPal to Visa and MasterCard, and I think that's improperly done. They're not the same business whatsoever. PayPal is right now more comparable to, again, a Stripe, a Braintree. Stripe is privately traded, and then I said Stripe and Braintree. PayPal is more comparable through Braintree to Stripe and Adyen, like we were just discussing earlier. But like we were also saying, the branded checkout being under threat from both Apple, Amazon, pretty much everyone under the sun. That's the current narrative. So if that breaks, you probably have a good investment opportunity. Prior analysis, I stated that the valuation of PayPal under 70 is interesting, but it's interesting assuming certain things are true. What are those things? Well, again, you have sustained unit economics in the branded checkout. What does that mean? That they don't really have to decrease their take rate, and they maintain relatively stable, not market share, but volume, payment volume. So we need to make sure that those things are happening for the valuation to make sense. And again, that would be the under 70 mark, where currently you have a price of 60. You probably will do well. And then on top of that, we have the buyback story. So PayPal is buying back a good amount of stock. Management has indicated that over the next several years, the company is going to focus on the capital return strategy of buying back shares. So if that's true, not the buyback story, but if the assumptions we just made are true about the relative stability in the checkout business and continued growth in Braintree, then those buybacks are going to look really smart. If that's not the case and we start to see deterioration in the checkout business, and remember that could be in two ways. Gross payment volume could decline, which would be very unfortunate. The second possibility is that the take rate starts to decline because of competitive pressures. In order to remain competitive, they have to decrease the take rate. If that starts to occur, same effect, right? Same effect. At the end of the day, the company's going to produce less in cash flows in the future. Margin compression is going to start to come into the picture. Investors are going to be worried about that. You could then have further multiple compression in the business, and those buybacks are going to look really stupid, right? So you got to figure out what side of the probabilities you think both scenarios lie, and then make your decision, or just kind of stay out of it and see what happens. You can observe from the sidelines. I think there are better, personally, this is now straight talk with you guys, I think there are better risk reward plays out there. There are definitely businesses out there that are just better businesses in general. Now, over the short term, like I said, I would definitely not be surprised if there's some short-term sentiment shift, if the narrative breaks here. One thing I will say, the broader lack of PayPal's involvement in this rally is kind of interesting, but I would say that's in line with peers. Adyen did not rally any more or all too much more over this past week, where we saw other sectors start to rally really strongly. We saw pretty much a rally in businesses that were economic driven or macro driven, where in a bad macro environment, those companies would not do well. In a good macro environment, those companies would do well. That's just off of the change in sentiment due to commentary from Jerome Powell. So that's my quick take or updates on PayPal. Again, you have an opportunity here potentially if certain things happen. You have to decide for yourself whether or not you believe personally those things are going to occur. I'll repeat them one last time as we close off this video. You want to make sure that the checkout business remains strong or relatively the same. And that includes both in total payment volume, or both or either total payment volume or take rate. You want to make sure that on average, it's having the same or equal economic impact to the overall business. And then on top of that, if you want that growth narrative, you need to see Braintree growing in there as well. Execution, last bit of commentary before we close off. Execution for some of their brands like Venmo. This is more so anecdotal discussion on the product. I don't think it's very compelling. I don't think Venmo is as compelling as something like Cash App. I think there's a lot of potential with Venmo if they use it better in the future, but I think Cash App definitely has taken market share for good reason. If any of you actually open a Cash App account, you'll be able to see that you have more optionality in terms of investing in both crypto, if you're into that kind of stuff, and stocks, which is also really powerful. So Cash App develops a greater customer relationship with you than PayPal seems to be trying to do. PayPal could get into that business in the future, anytime here soon. Why not? Go ahead and do it. And I think it would also be prudent for PayPal through their services to offer more compelling banking options. Not that they would become a bank, but just partnering with banks to offer more attractive yields. There's fintechs out there that I know would be better suited or very willing to lend a hand here to PayPal. Okay, but with that being said, that's kind of where we'll close off the discussion here on PayPal. And I hope you guys have a great one. I'll see you guys on the next one. Bye.